Chuck, thanks for joining us. Let's get the miss out of the way here. About half of this miss, if I'm not mistaken, comes from the South American business. Another half comes from a tax rate that was higher than analysts modeled. None of that should really be a surprise. Why did analysts get it wrong?
Yeah, I can't speak to why analysts got that wrong. Matt, what I would say is overall we had a very solid first quarter, and we were spot on versus consensus across the world with the exception of South America and perhaps the deterioration in Brazil and how quickly that manifested itself wasn't captured. But we're especially pleased about the results in North America. A record first quarter, 7th straight quarter of margin expansion, and overall we're very, very much on plan to meet our objectives for this year, which is improved margins both in aggregate and on a percent of net sales basis across the business.
Yeah, look. I think the margins improvement is impressive at least. Let me get out of the way the stock question, because another company today that I won't name beat earnings estimates because it isn't taking lumps that inevitably will have to. You guys seem to be taking your lumps and going forward, and yet the market doesn't appreciate 7 quarters in a row of improving North American margins. Why? How is the market getting this wrong?
Well, I think what we need to do is continue to drive results and continue to put the results on the board quarter after quarter. Clearly, this management team is focused on delivering results and doing what we say we're going to do, and I think the first quarter is another example of that, and we're going to have to continue to execute towards our 2016 objectives, 10% margins in North America, profitability in Europe, and continued strength in China. And as we do that and put that track record on the board, I think it'll flow through from an investor perspective.
Are we going to see you coming in ahead of those targets? Because, look, 8.8% was your margin here. That was 1.1% better than a year ago. Europe, the business, at least according to all the analysts watching, is doing better than expected. Are we going to see you coming in early with a profit there and with 10% margins in North America?
What we've committed to is 10% in 2016 and profitability in Europe in 2016. That's the plan that we're executing to. We continue day in and day out to look at ways to drive efficiency improvement in the business. If we get there earlier, great, but that's certainly the objective that we're marching to right now, and no change from that perspective.
One of the reasons you're doing so well, especially here, is selling light trucks and SUVs. Suburban and Escalade sales almost doubled compared to the same quarter last year, and those are high-margin vehicles. Obviously, the gas price is helping you out. Do you expect that tailwind to continue?
Well, we're certainly pleased about the strength of full-size pickups, SUVs, as well as our new mid-size truck. And what we're excited about is continued strength in those recently launched products as we enter a very strong launch cadence, fundamentally replacing the entire Chevrolet passenger car portfolio over the next 12 to 18 months. So we're going to go from strength to strength, and again, we view that as a real positive from driving our margin expansion in North America. What
do you expect coming up, or going forward, I should say, from the mid-sized trucks? It seems like a case where car guys won out over the bean counters there, no offense, and the Canyon in Colorado are hailed as really a breakthrough in the American truck market that a lot of others weren't brave enough to kind of make that step.
Yeah, just for the record, this bean counter was very supportive of the mid-sized truck when I was the CFO in North America. It was risk. It was a risky move, but it's one that's paid off. If you look at the results so far, transaction prices for both the Colorado and Canyon above $30,000. Our segment share at 31%. Very low diversion rates from full-size pickups. So we believe thus far, and it's still early days, but thus far this is a real home run for us, and we're going to take advantage of it. We've already added the 3rd shift at our facility in Wentzville, and we think this is going to be a big opportunity going forward.
Should we be concerned, Chuck, about the loss of business in Russia? I mean, there are a lot of almost tabloidish reports about others moving in to try and take market share there, but does that market really matter that much anymore?
Well, when we sit back and look at it, and again, from a management team perspective, we're about driving shareholder value, maximizing shareholder value, and making sure that we invest in those places that are going to drive long-term returns. And as we looked at the Russian market, the challenges today and when it could recover, it just wasn't a good return on investment. We don't think that the market's going to recover anytime soon. It would have taken a significant amount of investment in Russia for us to fix that business model, and we felt that those dollars would be better invested elsewhere.